Hello, welcome back to Financial Freedom with Jewel. Today we're going to talk about a high yield dividend ETF, which is really a game changer. But you know me, give me one moment, I'll be right back.
You know I'm a stranger, willing.
Okay, as promised, we're going to talk about the ETF JPEQ. That's JEPQ for Cooper. Okay, what do you say? What is a JPEQ? You guys, it's simple. It's an exchange traded fund through JP Chase. Basically, ETF is nothing more than an investment tool, vehicle that you use. It's comprised of a specific index. In this case, stocks, bonds, commodities, all things like that. You don't have to know all those kind of things, but you want to know that you're dealing with stock market, you're dealing with exchange, you're dealing with fluctuations and volatility at sometimes. But with JPEQ, you guys, this is one people are sleeping on. This is a long-term ETF. We're not talking about getting in, making money, and jumping out like a day trader. We're talking about sticking it out for the long term, maybe 3, 4, 5, or more years. As you stick it out, you're going to see that interest compounding every single month. And because this is what they call a dividend paying ETF, you're going to get money every single month. But what you're going to do is you're not going to take it out. You're going to reinvest your dividend every single month and let this thing grow. Now, this example I have right here is using velocity banking. Velocity banking is nothing more than your income and your expenses and your cash flow. In this case here, they have $520 after all their bills are paid, after all their debts are paid. They're sitting on $520. You may say, throw it in your savings account. No, don't do a savings account because I've done it before. They're going to give you pennies on the dollar. We're talking about a 0.01% return and your percentage yield, which basically, I've done it before, you guys, is $8, maybe $8 to $20 for the whole year. Yep, the bank has used your money to make money and they're paying you pennies on the dollar. We're going to flip that narrative. We're going to go a step beyond and above the high yield savings account. This is better. Let's say, and remember, this is just an example of someone who I'm trying to work with them and have them to say, hey, let's look at doing a JPEQ ETF and just use it as your investment, like a savings account. You may say, well, how do I open up one? I'm going to recommend Robinhood. Anybody can do Robinhood. It's easy. Go on your phone, iPhone, whatever phone you have, go to the app store, go to the store, look up Robinhood. You're going to open up a Robinhood account. Now, of course, because you're dealing with money, securities, and stocks, you're going to have address, phone number, date of birth, and they want your social security number. Because remember, this is all tied to investment. You're going to make money. Let's do it the right way. So let's make sure we're legitimate. Go to that brokerage firm. Now, you guys, there's things like Schwab. There's things like Fidelity. You have different brokerage houses. I'm recommending Robinhood because it's like the new one. Anybody and everybody can do it, and it's at the click of a fingertip. It's on your cell phone. But you know what? I'm just a voice. You make the choice. Whatever brokerage house works for you, that's what you want to do. But remember, there are tons of them out there. So let's go back to the Robinhood account. Our account is all set up. You want to hit that search button and look for ETF, JPEQ, JEPQ as in Cooper. Okay. Right now, you guys, the last time I checked it was going for $55.34 per ETF. Okay, this person, $5,000 is going to allot to it. Okay, but if you don't have $5,000, put $500. That's going to get you about nine ETFs. Purchase them, you guys. ETF is simply a investment vehicle where it's invested in various different indexes, whether it be stocks, bonds, commodities, all those things in one. They're investing in. This right here is mostly technology based because technology, of course, with AI and ChatGPT, those things are really moving and they're becoming the 21st century go-to type of tools. So this is mostly based in a technology type format. JP Chase is offering this one. I'm going to give you an example. Now, we made our $5,000 deposit. We bought about 92, 93 ETFs. Okay. At the end of every single month, when they get paid, their positive cash flow. Remember, velocity banking is income, expenses, boom. You minus those, you get your cash flow. You work off positive cash flow. Instead of the savings account, we're going to go ahead and we're going to make our money work for us. They've injected their $500 in here. The first month, $46 they've made. You can't get those kind of returns, you guys, even if you try with the savings account. But I'm going to tell you something. Remember, anything dealing with the stock market is going to be an investment, okay? It's going to be a risk. There's volatility, there's ups and there's downs. There's what they call a big, bull market is going up or bear market is going down. Remember, the bear, boom, hits down. So that's going to happen, but this is long term. You're not jumping in, you're not jumping out. The goal is to let it sit there, let it go through its ebbs and its flows, its ups and its downs and its cycles. But as compound interest happens, you're going to make money. Remember, this right here is what they call a high dividend stock. They're going to pay you a dividend every single month. The goal is not to go ahead and say, oh, I got my dividend check, I'm going to cash it. No, you want to reinvest that back into your ETF. Okay, let's go back to the chart. We've gotten $5,000 worth. Now, the first month, our positive cash flow, don't worry about the 20, I'm just going to work at even numbers. $500. That first month, $46 return. Second month, another, we're going to inject that $500 in here. $75 return. Look, guys, look, third month, inject my $500 in here. $103 return. Okay, look at this, fourth month. I've injected my $500 in there. Look at this, $131 return. That's money given to you as you reinvested your dividend and as you've added the $500. Okay, fifth month, once again, I'm gonna get paid, cash flow, $500. Now look at me, I've made $160 on my money sitting there. You guys, it's compounding. I'm gonna go to the 6th month, you guys. At the 6th month mark, put the $500 in here, boom, $189. They've made possibly 1, 2, 3, 4, 5, about $700, you guys, in 6 months time. Now, the good thing is that we know when you put this in here, you're gonna add, what, $6,000 if you continuously pay that $500 every single year. You guys, you're compounding that. Can you imagine what you're gonna have? If all this goes right, let's say the market does what it's gonna do, we know markets are like that, you can pretty much make about a good $1,500 or $1,600, maybe more than that, based on you just being disciplined and putting your $500 into your ETF. And you guys, guess what? As you put more into it, you're not only having what, $5,000 worth, now you're down here to about $11,000, $12,000, $13,000 that you have invested in ETFs. You guys, this is how people actually become financially free. They invest in things like that are long term. Maybe your goal is in 5 years, you want to buy a car cash outright. Your car is getting older, but you want to buy it with cash. You guys, this is going to be your ticket right here. No more going to the bank and saying, hey, can you finance my car at 4.5%? You're going in there and you're saying, hey, listen, I want to purchase this vehicle. I have the cash. Put the cash down. We know when you actually pay in cash, anything over $10,000, it's going to initiate a bank investigation. It's okay. You're above board. You're doing things the right way. You want to be able to invest in this kind of thing. Let's say you have a kid going to school. You guys, invest in JPEQ. Make sure that you're setting your family up for success. Maybe you're looking at retirement. Maybe you didn't do the annuities like you should have done it. This is a way you can catch up, you guys. Invest in an ETF. There's all kind of ETFs, you guys. I'm not particular to, one, but this right here is just working right now. Have a couple of ones I'm looking at, but I thought, get this one. This right here is doing some moving and shaking. And the thing about Robinhood, you can adjust up and down and find out what it did 3 months ago, what it did 7 days ago, what it did 28 days ago, and what it did last year. You're gonna see this one right here is slowly inching up. Okay, until the next video, I'm gonna encourage you, if you're doing velocity banking, you have positive cash flow, you paid all your bills, you're living the life, you're doing great. How about instead of going into a savings account, why don't you invest your money into an ETF? Because guess what, you guys? That is the wave of the future. ETFs, exchange traded funds. You guys, it's going that way. Why don't you jump on the bandwagon early, not late? Okay, till the next time, to the next video. I'm Julia, Financial Freedom Friend. I'm here until you win. Comment, let me know. Are you gonna invest in it? Do it, follow Robinhood. You guys will be happy. Remember, compounding interest is your friend. Every single month, you're making money and adding it to your money, okay? Till the next video, I'll see you next time. Bye-bye.